advanced coaching session, Clueless Day Trading, recording has started. Full disclosure, this is purely for financial education and not for any solicitation or advice. Very clear about that. So please don't ask me any personal questions. This session is going to be uploaded on the Clueless 8 YouTube channel for everyone to review at any given time. This is a free webinar. We have a good number of Clueless 8 Trading members on tonight. And tonight's purpose of tonight's session is to keep people abreast of what is exactly going on. We'll try to keep this within a moderate time. It's 8:34 Eastern Standard Time. So hopefully we'll finish by 9:30. It always goes a little bit ahead, but like they say, when you're having fun, who cares about time, right? All right, let's see how fun this is. First and foremost, you are seeing a quick snapshot of please mute your microphones because I'm going crazy with those screeches. Thank you. Everyone mute the microphones or phones or whatever they're using right now. Use the mute button. Okay, somebody's mute button is not on. Please mute your microphones. Okay. Looks like that's not working. Hold on. Okay, that sounds like a wild elephant. It sounds like, you know, what the markets are. Okay, is everyone's microphone muted or the volume down? Okay, great. I can mute all, actually, mute other people. Okay, great. So let's start off tonight's session by talking about what exactly is going on here. First and foremost, my observations, like I like to say. In life and in trading, we all go through the same things. And the two ingredients that make things work is fear and greed. What we do in trading is not any different. The reason why we do stupid things, and believe me, I'm not immune to it either, is because of the incessant and continuous volatility that's driven by machines that do what they need to do in order to keep us from making money. We all want to make some money. And I sound stupid, but that's just the way it is. This business is not about sitting there watching the show on your screens or looking at my charts and saying how good the chart looks. The reality is what we do with it. I have tried my best. And I will continue to do so in making sure that people understand what the content that I'm putting through, which is extremely powerful, extremely precise, and consistent. It doesn't mean that every single trade or every single chart will work on our time frame, because the human time frame is not the same as the market time frame. What we think might work in 4 hours or a day or 2 days or 3 days sometimes might take 5 days. But if we know how to read the signals, and have the discipline and the focus to stick with it, more than 80% of my trade alerts, and I've back tested this, it's documented, work to their actual destination. Primarily, given the background of the markets as we're going through on the long side, but also on multiple tactical shorts, which I use, as you all know, and many of you have benefited and participated in them through the indices, through the S&P 500 SPX or SPY puts, the Russell 2000 or IWM puts on the short side, I mean, and the UVXY. There are multiple ETFs out there which also serve the same purpose. But one thing I realized a long time ago is I can't be a master of all trades, jack of all trades and master of none. I specialize on certain things, and there are great people out there who specialize on many other things. But what I flourish on, and I think it's very important for all of you to realize, and many of you know firsthand, is my forecasting abilities in very difficult times. When you look, case in point, the last 48 hours, or I should say the last 24 hours, markets were completely crumbling yesterday. You could see that by the sense of desperation in some cases in the chat room, the ultimate desperation and despair talk in other forums, StockTwits included, and yet the markets did what they did today. Now, did I know from point one that when the markets opened that this was exactly what's going to happen? No. I did a measured probability based on my charts on what might happen given what I was seeing on the internal indicators that are quite simple for people to follow. What is difficult to follow is your mind. Now, this is not a speech about Tony Robbins and Oprah and all those things that I say, Dr. Phil. This is a point of you identifying whether you're focused enough to act and react to what is going on in front of you. Now, here's the problem, and we're going to get into it today before I get into the charts. The problem is that the machines that run the market don't cooperate what we think is going to happen over the next half hour. So what do? They make you do stupid things. It's like your high school buddy who made you do stupid things. Except the algos are not your high school buddy. They're here to completely take all your money away. It's happened to me. It's happened to all of you. It happens to me less than it happens to all of you. I don't need to remind anyone. They know. So what you need to do, and I know it sounds childish, but that's, this business is about learning. You have to look at yourself in the mirror and say, am I focused and disciplined enough to do this? I know everybody is. If I can do it, anyone can do it. Yes, I do have more knowledge and I have a passionate interest in what happens in global economics and all the wonky stuff about Federal Reserve stuff and central bank stuff and what's happening in Ukraine and this and that. Fine. I also love watching basketball games. I also like watching, certain things that I like shows on TV called Billions. Right? So point is very simple. What I'm getting at is it's not the charts. You all can read the charts to a certain degree because I put enough fat arrows and things like this and things like this, like an arrow. I mean, what more could be as simple as what I put? Yet I hear people sometimes say, I don't understand it. Well, in that case, you really need to go on Dr. Phil and say, I really don't understand arrows. Now, I'm not mocking anyone. I'm simply trying to help, because at one point, stupidity has to go and action has to come in. Now, some people might say, oh, well, this happened to me before. I've heard people say, oh, this happened to me before. I don't trade that stock. Like, what is a stock? A stock is nothing but a number. So what does it really matter? Pure technical analyst, which I am not one, by the way, just so you know. I incorporate a good number of fundamental and behavioral sentiment indicators in my modeling on what I do. These charts are not just put out there just out of random thing. Like I draw a couple of lines and okay, that's it. It's going to go there. There's a lot of thinking that goes behind it. And I think all of you know that. And actually some of you know that better than others. My service is a learning curve. I've mentioned it to every single member and free trial subscriber who have a chance to speak to. Okay? Because I make a point of doing that, especially the newer ones over the past year, because my service is designed for you all to be intelligent and act on your own decisions. There are many services which say, okay, buy the stock, going up, it's going to cross the 10-day moving average, blah, 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 blah. You make $2 on it. So then what? If you notice, I put a significant amount of emphasis on the market, this being the ETF for the S&P 500, the most important index on the US markets and actually for global markets, to be honest with you. So the reason I do that is because it doesn't matter what trade you're doing. If the markets are about to crap and these big sell programs are going to hit for whatever reason, and I try to put out the alerts on the breaking news stuff and a little analysis on it as quickly as possible, real time, then it doesn't matter what trade you're in. You're doomed. A stock can be going up $10 and then reverse and be down 5. How many times have we seen that? So time to wake up. Time to understand that you need to spend some time, energy, and that's the reason why I'm doing this free webinar, and spend a few bucks sometimes to do the advanced coaching sessions, because every single person who's taken those has benefited and understood the message that's coming out of all these lines and all these little terms about what's going on. And the people who don't do it, I wonder why. Is it the penny wise and pound foolish? Like, oh, I'm not going to pay $40 for a 2-hour session, just generally what my sessions last. $20 an hour. Try to hire somebody to clean your house. They charge you $100 to clean your place. So it just boggles my mind. Frustrating at times. I'll tell you that, the truth. Because what happens is that money is not going to make me rich. What's going to make me rich is my own efforts. Because there's a lot of stuff to take care of. Bills, debts, loans. We know that. So what amazes me is that people still refuse to do that. Now, what happens to them when they don't do that? They don't quite get the message that's coming out of all these, and we're going to go through quite a few charts tonight. All these tactical charts that are in play. And they wonder, oh, wow, nice colors, nice lines, nice arrows. Do the arrows mean exactly they're going to go there? They don't understand the internals, even though I make it as simple as just putting the fast stochastics in there. My own personal charts have 5 more different indicators down here. Now, the reason I put this there, because it's the simplest one to read. Why do you think the most influential presidential candidate is moving so fast, so quick? Because they love his hair? Donald Trump is so influential and stuff because he keeps things simple. He keeps everything on 4th grade level. Make America great. Great. Okay. How are you going to do it? It doesn't matter. So the point is that I'm not getting down to that level, fourth grade level, to explain things, but I'm making sure that, and by the way, if anyone's walking into the room, please identify yourself. Because if you're not, then I'm just going to click you out. Hey, Scotty, are you there, buddy? Okay, my good friend Scott just walked in. Okay, so point is that it makes, so the real purpose of these of the advanced coaching sessions are, this is a free webinar, it's a different thing, I'm not going to get into that detail, is makes my life simpler. When I'm putting out stuff out there, people are getting, let's say, 60% of it. Good friend, you know, there are people in here who've said, I never understood your chart. I said, why? And then as they started to get involved, they're getting it. Because getting it is part of keeping 60% of your profits. When you don't get it, trust me when I tell you, you're going to lose it all. It doesn't matter what I do and what my charts say, because my charts are accurate. I called the market down here. I didn't say it was going to get up here. I'm not going to lie about that. I said the pattern symmetry dictates that there is a strong possibility. And please, you can review my video cast from that time to say that. I said there's a strong possibility that that might just happen. Because pattern symmetries do happen, like it happened here. Back in the August flash crash, straight down 90 degrees. Wow, waterfall decline. That's not a waterfall. That's like all of you just jumping over the Niagara Falls. Okay? And then boom. And then September 29th. And then this. I said the pattern symmetry possibility is there. Don't be surprised if we get up here and test these highs, which we are probably going to do. So, don't want to hammer on the point too much, but make my life a little bit easier, okay? Because sometimes when I get a little bit irritated, you hear that in the chat room. And I'm a nice guy. But for God's sakes, do your part. No service interacts with their members to the degree that I do. And I do that because I have a passion for what I do. And in a weird way, I do want to help people. I'm not some sort of socialist. I mean, I truly believe that, you know, if you can get traders going, it's good. It's good when everybody makes money. But they have to do it with their own efforts, with my guidance and their own decisions. That's all I got to say. Now, saying all that, what screws us up in this business? Because we have to get down to the basics of what does it. I mean, I can show charts and charts, which I've done, like, you know, and tonight we'll go over a bunch of them too. But what does it matter? Does it matter that I said Virgin Airways might get bought out? Did you buy even 10 shares? My favorite last words. 2 people did. And guess what happened on Monday morning? They got bought out. Now, did I know they were bought out? No, because I saw it in one of my services that I pay. You know, there's a lot of things that I pay for, obviously. And that it showed that Charles Gasparino, who used to be the biggest honcho about rumors back in the 90s and also in the 2000s, before I think he got in trouble, said, okay, this looks like, I looked at the chart, I said, you know, it works. Let's get in. Just bought shares and bought cheap calls. And look what happened. Now, this is the honest question, so please, if you don't answer, I'm shutting down this webinar right now. I need people to stand up and say this. They saw the alert, but they didn't do anything. So let me start off with, well, Alec wasn't there, so I'll let him pass. Always, Exita, did you do it?
No, I saw the alert and I didn't do it.
Okay, just say yes or no. Okay, that's good. Brack, I don't think you were there, so I'll let you pass. Who's Chris? Okay. Okay, didn't do anything. Okay, fair enough. This is just a statistical game we're playing, okay? A real one. Hey, Corey, how are you? Corey, did you do it? Corey, did you take the Virgin Airways trade? Mary, your answer doesn't...
Yes, I did, Clue. I saw your thing about 10 minutes before the market closed.
Yeah,
Thanks.
okay. Mary said can't buy everything, Clue. The worst, excuse my French, bullshit retail excuse I ever heard. You couldn't buy 50 shares? You couldn't buy 100 shares? Maybe, I don't know. I don't buy that excuse. Can't buy everything, I don't buy it. No offense, man. I'm being very direct here, okay? Scotty didn't do it. He said great one. Well, I know it was a great one. I'm just doing an exam. I just want to, this is the real deal, okay? You know what WYSIWYG means? What you see is what you get. This is the real deal. This is not about making people feel good. This is about people realizing their mistakes, including mine. And I do enough mistakes too. But if I don't face up to it, like I tell my son, then we'll never get better as human beings or traders. So it's wake up time, all right? A little bit wake up time. And I'm not just picking these ones. I mean, there'll be losers too, but honestly, there's been much more winners than losers. That's the only reason why you guys are here listening to me. Craig, did you do it? Craig? Craig, can you hear me? I guess no one's going to answer me now.
He said no.
He said no.
Okay, fine. And who's Jackie? Sherry? Okay. Jasko, did you do it?
I did not. I didn't see it, but I did make up for VRX.
No problem. I didn't ask you for a long-winded explanation. I just wanted a yes or no. Who's Matthew? Matthew?
He said he has no mic.
Okay, Matthew doesn't have a mic. Oh, I'm sorry. I got to scroll down here. Hold on. Okay, Scotty did 5 shares. All right, man. You're up on my list, buddy. That's awesome.
Why didn't you ask me, Clue?
Who's that?
This is Red Gem.
Yeah, I'm just scrolling down. You did buy 1 share?
No, because I wasn't a subscriber.
Well, that's
so I missed it.
That's not your problem, not mine. Okay?
I know.
Okay. Red Gem, okay. What Scotty Isaac also missed Red Gem on the Big Four. Okay, I don't want like long-winded commentaries here. Gonna go higher still? Yeah, it probably will. Mary, you don't need to have made 750 profit less 170 commissions. Okay, fine. Well, I'm not going to get into this right now. Okay. All right.
Saying it's a waste of time to do.
Yeah, I know.
Trades for me, anyways. Yeah.
I'm reading it. The point that I'm trying to.
Okay.
The point I'm trying to make very. Why there's all these people coming?
Yeah, it's to participate even in a small trade. I get it.
It's not that about making money. It's about understanding the reaction of a chart. That's what I'm getting at. Now, who's Risky? Risky, can you identify yourself? One second, please. Risky, can you identify yourself? Hey, Karthik, how are you, man? Okay. All right. So what I'm getting at is a very simple concept, okay? It's not a game of like, making money or not. You have to participate as much as possible. And it doesn't mean you have to look. I know people who have done 50 share trades in multiple stocks because of small accounts, and their accounts are up 300%. So I don't want to hear all the garbage about, oh, I don't want to do that because this is too small. What do you have to do? Buy big positions in every stock? There are people who have done 2 options, buying like $7 options and riding the wave to 40. So I don't want to, I know I've seen it all. I know people who write to me and said what they have done. And the reason we don't talk about this in the chat room because we don't want to make other people look like idiots. And I know people who have lost money and then have gained back because they're focused and they don't make excuses. Retail traders, including myself at times, are full of excuses, except you know what? I gave up making excuses years ago. The problem with most of you, and I'm being very direct, and leave my service if you want, is because you're full of excuses. And that's the reason why you're not making the monies you should be making. They say, oh, I don't have enough money to make it. And you know what? It's high time that you got rid of those excuses, because those excuses are the things that are completely keeping up. And then you blame, oh, that chart didn't work, or that market did this. I know the market's difficult. I live with it. My losses are far bigger than a lot of you guys, you know, and some of you guys are much bigger traders than I am. I know who they are. Okay? And it doesn't feel good. It doesn't feel good when you're down 5, 6, 7 grand on a position. But if you followed the discipline, understood the charts, and what I kept on doing yesterday was talking about the 4-hour stochastics. You think I just do this for fun? With the money that everyone's paying me, I'm not doing this for fun. Honestly, I'm trying to help you guys out. So it's time to wake up. So here we have this 4-hour stochastics. I kept on showing it, saying, listen, we're deep oversold, the bounce coming, constantly showing it, and boy, did the bounce come. So all I heard, and no, nothing wrong with it. I even made fun of Scotty here and there, but he's a good friend, okay? It's like right there at this point, which I said might be a dragon bullish formation, right there, okay? Which is exactly how it's playing out. Just the way the stochastics are playing out. So excuses are a dime a dozen. I've given myself those for a long time. It doesn't work. So keep on giving those excuses, and you're never going to get anywhere. Don't like it? Leave the webinar. The bottom line is that you have to understand, or at least have a basic understanding, more than a basic understanding, of what exactly these charts are all about. Just following this would have made you some very serious money today. S&P calls bought towards the middle of the day yesterday plummeted because this happened, right? This happened around, well, this is a 4-hour chart. Of course, it was a lot more zigzaggy, but this happened, and I showed exactly what it could end, what might happen, what level we might go to. Did you bother really looking into it? Honestly speaking, if you really look hard in what you did or didn't do, you can't say to me with a straight face, okay, that you did. It's like that TV show with Tim Roth. What was it called? Not Liars. What was it called? Anyone remember the name? It used to be one of my favorite shows, and then they took it off thing. I forget. I mean, he was one of those. He was a human lie detector. Okay. So the point is, don't lie to yourself anymore. All right? Because I lied to myself for a long time. It doesn't work. So bottom line is, you got to work with it. Now, does it mean that it's going to be simple, straight line up? That, oh, we got oversold. We're going to look what happened today. The market zigzagged around enough times, but here is the difference. The difference is you're working with a service, the Clueless 8 trading service, okay? which is not 20 people, which is me and a staff in the back doing a lot, software stuff and handling everything and this and that. I'm not delegating all my trade alerts and everything to a bunch of guys like many other services out there that I know a lot of these people. Personally, I know 2 of them. Biggest services around the New York, New Jersey area, New York area. Who have a staff of 10 people just churning out stuff, boom. Here you're coming in, you're being fitted with something. It's like wearing a $5,000 suit where they're tailor making it for you from Savile Row. You know what that means? Why don't you Google it if you don't know what Savile Row means? Seriously, okay? I don't have a $5,000 suit. I buy them a lot cheaper, just the way I buy my stocks. So you're being tailor-made for things here, but you're not doing what you're supposed to do. So there are not 20 people out there just joining us, interacting with you guys almost every couple of minutes. It's not fun all the time, believe me. I want to shut down the chat room sometimes and just do my own thing. Jay Pester, who's not here tonight, is an excellent trader. He says, man, I don't know how the heck do you do it. Because he was trying to post some of his own trades and said, man, I can't believe you do this, while you're doing your own trades. Well, maybe I'm not doing like 5-minute trades every 2 minutes, but it's true. It's a lot of work, especially when you put real-time trades out there, not like after the fact. Like somebody I talked to today, a new member who's going to be joining us, who's here tonight, said, no after the fact stuff. So, simple stuff. Got to do it. Now, intraday, and this is what we're going to get into next, is the volatility is intense because these machines want to make sure, and it's not a joke, okay? They want to make sure you're out of every trade, long or short. I've been caught on short trades where the market's gone the other way, and I'm like, what the heck? Everything is, and guess what? And I've shown this before, and then 24 hours later, the market drops 200 points. Yet I suffer for maybe 6 hours during the day. And I keep on buying those puts, cost averaging down, because my technicals are telling me that I'm severely overbought. My technicals are telling me on a simple form that I'm severely overbought, that a reset is coming. Resets are resets. It either makes you a lot of money or you simply say, oh, it's a 5-letter word. 6-letter word. Reset. Well, 5-letter word. So wake up time a little bit. Because everything that I share with all of you, just so you know that, is hard-fought experience. Not something I just woke up and read a stupid book on technical analysis, which honestly means nothing. Because this is your grandpa's market, like I've said a zillion times. This is a market driven by algorithmic high-frequency trading programs who know exactly what those awesome books on technical analysis written 20 years ago, 10 years ago, 5 years ago mean. So what do? You think those guys who are sitting there programming those algo programs don't input all that just to screw you up? Of course they do. Why do you think these hedge funds are losing so much money? They're still down for the year. They have the smartest people in the world. They have guys coming out of Harvard Business School. Big doo-doo. And they can't figure out how to make money in this market? No, they can, because on average they're down about 3 to 400 basis points, at 3 to 4% on a S&P 500 market. And Chris, hold your questions for later, okay? Is VRX going higher? Yes, it's going higher. It's going to $40. So bottom line is, don't ask any questions till I finish. So bottom line is that it's not, that famous thing that I think Oscar Wilde said that. There are way too many educated derelicts in the world. And you know what the problem with most of you are? You guys are way too educated. Way too much analysis paralysis going on. Technical analysis on its own doesn't work completely. It's a fact. You have to mix in with fundamentals. You have to mix it with the sentiment indicators. You have to mix in with gut experience of what goes on, what you might feel. And that's a big factor in what goes on. A lot of the stuff that I'm putting out there is because I'm feeling it. Now, how do I explain to you what I'm feeling? It's gained from years of making, you know, from learned from hard fought experience, fighting the wars. It's like a Marine out there. So give me a manual how to go kill those bad guys. He says, yeah, take the gun, take the M16 and shoot them. It doesn't work like that. It's hand-to-hand combat. That's what this market's all about. All right? So hand-to-hand combat. Want to learn it? I'm teaching a lot of the tools. After that, you're the one who's got to dodge those snipers from the rooftops, all right? That's the way it works. Okay, now, let's get into the last thing I'll say. These machines are self-learning. These programs that are used, not all of them. Remember, just like anything in life, every single algorithmic high-frequency trading shop is different. Some are better than others, just the way some traders are better than others. So what does it mean? What it means is some are more predictive analytics, so they can predict what's going on. But remember one thing, us humans are smarter. Do you want to get to that stage where you're smarter? All of you are smart. All of you have been somewhat, have been successful in what you have done. I know some of you personally. You guys are great. So why can't you be smart at this? You know why? Because here logic is upside down. Despair is when you buy. Euphoria is when you sell. What happens in the other sides of business? In life. Just the opposite. And it's not easy. Investing? Yeah, try to buy the market down 500 points. Sure, investing is good. You know, you can buy that. Like Jasko says, and I kind of agree with him. At some point, we disagree in the time frame. This market will have a nice 50% correction. It's not going to happen in one day. Are you going to be there to buy that? Were you there to buy these lows? Okay. Were we? And I certainly was, you know, showing the path. Were you there to buy these lows instead of asking where the bottom is? Just the way now you're asking where the top is. Tops and bottoms are processes. Okay? They are not one-day events. Right now, you just the way I showed, saw it on, you know, I knew this, but then when CNBC ran it, I was just like, wow, okay, we have a $1 trillion bet against the market. Seriously. We have a lot of, you know, people say, oh, the shorts are all wiped out. They're not wiped out. Is this me writing this? This is an 8-year high. Why is everything 8? It's a clueless 8. Okay. Because it's an infinite loop. That's why it's an 8. Okay. Now, this doesn't mean they're not going to be right. In about a year's time, 6 months' time or so, we're going to get some major election jitters coming up. No question about it, all right? We could be down 20% on the market. So this $1 trillion short interest might be 1.3 trillion. Can somebody tell me if 1 trillion goes to 1.3 trillion? How much more that is in dollar terms? Please, somebody stand up and tell me.
$300 million.
300 million? Okay, who said that?
Billion.
Exactly, who said that? Who is that?
Alec?
Okay. Alex, the money guy. Exactly. It's 300 billion. So this 1.3 trillion could be $300 billion more in 6, 7, 8 months' time. Here's my question. If you want to do a macro bet, okay, on the market, that the market's going to fall 20% by September, go ahead and do it. But in the meantime, you're going to get killed. John Paulson, who made how much? I think he made like, I don't even know the number. It was huge. like $10 billion shorting the mortgage market back in 2008. Read what he said. He used to lose his head because the markets used to rally against him, and he was down big before he won big. Now that's a macro bet. Do you have that type of patience or money to do that? Go ahead and do it. I certainly don't. So macro bets are different than looking at the medium term or short term or intermediate term and making money. Look, when that big short comes, it doesn't happen in one day. Okay? It slowly builds up and goes higher, goes a little bit higher. You're completely like, excuse my French, screwed at that time. Okay? Then comes down a little bit, then rallies up again. Comes down, rallies up again. Then goes like this, and like, oh my God, rallies up again. You're like, man, this is too much. And then slowly and surely, as it keeps on rallying, it keeps on going. And then one day it just goes like this. The question is, are you ready to handle this thing? Because if you put $100 here on the short, right here, it would be $30. So let's not talk about these huge things because we're not billionaires, all right? As you see it coming, I'm going to certainly see it coming, and I'll show you some long-term charts when you can actually read when it's coming. I've showed it before too. You see crossovers, you see different things, and then you get those flash crashes like we did in August, okay, which just happened, which was like a lottery ticket. Boom, for shorts. Don't expect lottery tickets to arrive every day. Hey, look, I had a bunch of lottery tickets, right? The Megas and Power. So I had a bunch of them because I never check them. So I put in that. I checked them tonight, you know, went there. Finally checked it earlier on. I won $10. Wow, exciting, $10, okay? How much did I spend on all those lottery tickets? Maybe 60? So lottos are lottos, okay? So if you want to play the big lotto like it happened here, it's just going to happen. But don't expect these type of massive waterfall declines to happen too often. Because even in this decline, if you notice, let's face facts, because you know, you guys are traders, you understand, there were big moves up in the middle. These are big moves, 300-point moves. They're blown you out. And by the time you thought, oh, the whole world was ending down here, which most people thought, comes this massive candle reversal, and the market goes up. And the market goes up from 15,300, just rounding off the numbers, to 16,700. In how many days? In 3 days. So now we're sitting here. This is the Dow chart. Wow, I haven't actually seen this one in a couple of days. Now we're going to get into charts, okay? Now we're sitting and saying, where's the top? Where's the top? It's all going to end. It's a process, not a one-day event, all right? And when you see those 1 trillion type of numbers in short interest, believe me, they're going to blast a whole lot of them. I don't want to get into politics and the dynamics of what central banks do and this and that. But like Jasko said correctly, it's tough to fight the central banks. Right or wrong, they're the boss. That's life. That's life. People think it's something weird. Power, he who holds the sword, rules. Okay? The guys with the guns win. They have the big bazookas. So we can sit here and like, oh, scratch our head and like, you know, get drunk saying, oh my God, they're so wrong. You know, Janet Yellen is so evil. Like, my God, this little old lady from Brooklyn, you know, she doesn't know what the heck she's doing. Like, waste of time. Let them do what they need to do and let the chips fall where they may. So looking at this here, this is the Dow Jones Industrial Average. You want to sound really smart, like I've said before at a cocktail party. I have too much of a family and pets. I never even go out that much, other than some nice dinners with my wife. Is this is where it's going to go. We're going to go towards 18,000. If you just want to look at, Bollingers and all this stuff. So first stop is your acceleration band, which normally should be higher than the Bollinger. You're looking at 17,838. So you're talking about what? Another 100 points? 120 points? And then possibly up here, which is the upper Bollinger. Not making this up. I mean, these things have worked. 17,950, call it 18,000. And we don't even come close to what the previous high was, which was 18,361. I did a quick thing, when I take my dogs out and stuff, some of these guys, now they're starting to get a little bit excited about the market. Wow, look, you see the market. I said, no, I don't see the market. I just look at my screens. So the guy's laughing. He goes, yeah? I said, yeah. So I go, listen, do you know when the market topped? No one can answer because no one has a memory. Just the way, and I'm a survivor of 9/11, okay? I passed through the building like 15 minutes before the first plane hit. I used to ask my clients, when do you think the market bottomed? Goes, oh yeah, right after we got attacked. Bullshit. We bottomed because of the Enron crisis and the fallout and the whole thing a year down the road in 2002. And if I ask that question overall, everyone's going to say the same thing. Oh, it was during 9/11. Yeah. No, because we were down for maybe like 2 weeks or something, and we rallied like nobody's business. Okay? So no one has a memory. And traders, believe me, they don't have a memory. I could ask you what happened 2 weeks ago, you wouldn't remember. So it's all behavioral stuff, all right? So let's try to stick with the charts. So we were May of 2015, May 20th to be exact. May 20th to be exact. 2 months after my wife's birthday. All right? We topped. Did it look like it was going to top? No. There was no indication it was going to top. And then we almost made it back to the top. So what I'm showing you is what is pretty much what the markets do, okay? We almost made it back to the top. Like, oh my God, it looks like we're going to break the top again. Then we come down nice. And it doesn't happen in one day. It happens over successive days. And then we go up again. It looks like a dragon bullish formation. And guess what? If you drew this line from that point, well, only way you could draw this line is if you had other reference points, right? So the reference points came weeks later. This was May, this is June, this is July. And then we went lower, and then we started to go up again. And in the meantime, a channel was being formed. This chart is not new. I've shown this a lot, many times. A channel is being formed. And then came the cataclysmic drop, sovereign funds blowing out, Norwegian oil funds selling, the Saudis selling like crap, oil's collapsing. The Icelandic prime minister, by the way, thanks to WikiLeaks, is resigning because he's hiding his money. Big deal. If you got a couple of $1 billion, you're going to hide your money too. So I don't know what the hell they're talking about, okay? It's so evil that you need to hide your money because the government wants to take it from you. Sorry, I don't want to get into that, all right? So anyway, and then you have this massive collapse. So you completely fell out of the channel. Mean reversion, gentlemen, ladies, mean reversion. So we completely fall out. We have a standard deviation almost 9. What does that mean? It means the distance traveled from the moving averages down to where all the way we collapsed was humongous. Next time you see a standard deviation of 9 and everybody on Fox News and CNBC and Bloomberg is saying it's the end of the world, please proceed to buy big. Markets are mathematical beings. We are human beings. All right? I don't know who the world made up the word human. Homo sapiens, right? That's what we're called, humans. Well, we're idiotic. We are the most idiotic, emotionally defunct beings. Okay? And the machines know that. That's why they screw us all the time. Or try to. My service is designed so that they hurt you less. So anyway, so you fell out of the channel. and reversion to the mean. I've talked about this in my previous video cast. You revert back to the mean. The crossover, which is very important, the 34 crossing over the 50, the 34 crossing over the 50. When you look at this, what's so difficult? What's difficult is the day-to-day machinations that we have to go through because our real money is involved in the picture. If we had, excuse my French, FU money and didn't care whether bills were getting paid, loans were getting repaid, things like that, then we would just do whatever you want. And guess what? You'd win big. Because remember that old saying, scared money doesn't make money. When you go into a trade, think about how much you're going to make, not how much you're going to lose. There are so many services out there saying, always watch your back, always be defensive. Then how the heck are you going to make money? Of course you need to quantify your risk. But think for a minute. You go into battle saying, oh shit, excuse my French, okay, I'm going to get shot. No, you go into battle saying, I'm going to kill the bad guy. Our proudest and finest, the guys who are out there, who are dying for us, and I mean that lightly, okay, so that we can do all this garbage. They're out there in the middle of frigging Iraq and Syria and some godforsaken places, you know, where people don't know how to frigging help themselves, and they're getting shot. Do you think they're going into battle saying, oh, I better watch out just in case I get shot? No, they're going in there saying, I'm going to do this because it's my responsibility, it's my duty to my country, and I want to do this for the betterment of those people that we're trying to help. Well, that's trading. Wake up. So today, this is why I say, okay, behavioral finance, everybody's playing defense. I'm playing defense. Look at my charts. You think I don't get pissed off every night I go to bed? That I didn't make, just hypothetical, $1 million over the last 2 months, given my forecasting and my charting? So this is, and you all in your own way have to think like that we're all playing defense. Nobody's playing offense. Market goes up a little bit, regardless of the charts. Oh, we're not going to lump in and stuff. Biotech index is flying high. I mean, it's just huge. Some of the things that I'm going to show quickly for the end of the webinar, look wild. Like this VRX is going to like 40 some bucks. Like it's crazy. And yet we're playing defense. So this is what happens. Everybody's playing defense. So and then certain times on a short-term basis, people get really happy and stuff, then the market's correct. But overall, it's a defensive posture in the markets across the board. Okay, it's a defensive posture in the market across the board. But go into a trade. I tell this to myself, not with fear, but with confidence. You go with fear, I can assure you, it doesn't matter if the trade goes higher, you will lose money. Now, confidence doesn't mean stupid confidence, which I see around a bit too, which is, oh, I just loaded up big time in that thing. Like, why? It doesn't matter how good something looks. Don't load up, quote unquote, big time. Big time means, and I've explained this before to some of you who have taken my coaching sessions, if you have $20,000 in options, I'm giving you a large number, and that's, in options, you are going to sell out very quickly because that 20 will first go to 15. You'll be freaking out. Then it'll probably go to 10. You'll be like, oh my God, what a stupid guy I am, and all that stupid stuff that goes on through your head. And then it's going to ratchet up to 25. The real smart way, which I try to, not promote, but I explain, you got a dollar cost average down if the charts are right. So your cost is not 20 anymore. Your cost is maybe, your cost basis, let's say here is let's say your cost basis here is 20. So it goes to 10. You want to bring your cost basis down to like at this level. So when it goes, you win. But if you leave your cost basis here, the minute you cross over 20, what are you going to do? Just like every other human being out there, you're going to sell out for 5 points, which is nothing, because that 25 gets to 40 in this type of volatile market. If you had a lesser amount, let's say you had 10K in there, let's say you had 5K in there, would you not be open to leaving it open because your losses would be less? You would hold it. You'd not sell at 25. You're like, oh, it's going, you know, this money, small money is growing. You'd probably sell at 30. So the larger amount of money that you have in one trade, like loaded up big time. The stupidest comments I ever hear from any retail trader, and hedge fund traders too, by the way, okay, is don't load up big time. And yes, you'll regret it because it did go there, but at least be consistent. At least be consistent. Loading up big time is, you know, of course it works. If you load up big time here, you'd make $2 million here. Load up big time here, you make $1.5 million here. Question is, did we think it was going to do this? No, but the patterns are very similar. That's why we are human and not robotic. I hope that's clear to everyone. Now, let's go into the nitty-gritty of this thing here. So at this point, this is a powerful, powerful rally. The standard, here is the interesting point here, okay? And listen to it carefully, please, because no other service will explain it like I'm doing it. And not because I'm the smartest of the lot. I'm just more relevant to what's going on. How about that? All right? More relevant to the current circumstances in the market because I understand the dynamics of the machines. You had a standard deviation down here of -9, i.e. the distance traveled from the moving averages. Very deep. Okay? Look what's happening here. The distance from the moving averages is probably a standard deviation of 1. Okay? Of 1. So we are not that far away because remember one thing, the closer we are to our moving averages, the better off we are. That means the market has solidity, has validity to rise. The prices are moving with the moving averages of the last 34 and 50 days. When you move away too much from it, that's a different story. We could easily come back and correct and come down and lose 500 points and test the 34-day moving average, which 17,200. We could easily do that. No question about it. It doesn't change anything. It doesn't change anything if we do this, because all we're doing is testing the rising moving averages. It's worked for me for years. It's when these lines start to turn, as I explained in detail in many other ways, by the way, just this is a simplistic version, is when you start getting in trouble, like the crossover that happened here. Now remember, we had a powerful rally off the bottom from February, and the moving averages didn't turn till at least halfway across the rally. We didn't know if the rally's ended. All I know is I follow these lines, and on the daily, they are pointing up. Yes, we can retest. Yes, we can come down and you know, do this type of stuff. But as long as these lines don't completely break, of course, you don't want to be holding longs if we are losing 400 or 500 points. No question about that. But unless we're doing this, and unless the lines are turning, you are in the uptrend. An uptrend doesn't break in one day. And this is the case in point. Okay, so short term, I'm looking at these numbers. We're going to 18,000. Somewhere along the line. Now, anything can happen. That's another thing I want to cover in this particular segment. What time is it? 9:34? Okay. being flexible and adaptive is the key to success. You have to be adaptable. Red Gem, please stop posting, CL up 1%, 39's on deck. Okay, thank you. She's, okay. I'm just looking at the text. Okay, just calm down, all right? I like excited people. That's good. Red Gem, you're very excitable. That's great. Okay. I know. I didn't mean in a bad way. All right. Because it's the box for the text on GoToMeeting is so small, so I got to look at one of my other screens. So anyway, so the bottom line is here's something very adapt and flexibility. Okay, extremely important. I can't teach that. My first interview on Wall Street when I came down from Boston, he was an ex-JP Morgan guy, and he said, you know what, Frank, really love your personality, all that enthusiasm and this and that. And I'm thinking to myself, I'm faking this. No, I'm a fun guy. But I can teach you everything, but I can't teach you personality. Well, ladies and gentlemen, I can't teach you personality. I mean the trading personality. I don't mean your personality with your spouse, girlfriend, boyfriend, partner, whatever. Okay? So, bottom line is how you adapt and how flexible you are in moving to changing market conditions. And I don't mean every 5 minutes. Okay? Is the key to dollars. I still am constantly learning how to do that. How about that? Every morning that I wake up, I'm ready to just adapt to whatever's coming in front of me, because this market is driven, I repeat, by machines. What is looking this good right now, which looks like a bull flag channel, can easily be this. We have seen it before. This went to this. And nobody here thought that we were going to get down here. Trust me when I tell you that. Other than uber dogmatic bears who always think that the market is going to fall 20%. Now here's the difference. We have some major support levels, i.e. rising moving averages or what do you call rising moving averages and stuff that are acting as support. So that's all I'm saying. So if you really want to know when the market's going to turn, just watch these two lovely lines and you're going to see when they start to turn, go bearish on a swing basis. But to adapt and to be flexible, I find that lacking in almost 99% of people, including the ones who are easily distracted like Chris, okay, and other people out there. So, all right, because what happens is it's either the wowza, everything's going to, I screenshot a lot of comments, okay, just for my edification, just for my education, because I study trader behavior too. And I see exactly the same reactions every single time. Market drops a little bit like this, like it did over the last 2 days, like, oh my God, it's all over, it's like finished. Doesn't matter what technicals and what I show and the whole works, it doesn't matter. It's the same comments. Okay, now let's move on. This is the Dow Jones I'm showing you, right? We have a rising wedge and we have basically, very simplistically speaking, which I've shown on my chart, is a channel. If this channel breaks below 17,400, it's really simple. It really is. Then we're going to come and test 17,200. Now, every 50, 100 point drops off a rising market feels like the world is just ending. It's like that big tsunami coming. Well, stop the madness, all right? Stop the madness in your head, because the market's not mad. The market is structured volatility. So we could easily fall tomorrow to 17,300, lose 400 points for no reason. Could be something that happened in Europe. Could be a terrorist attack, could be some central banker saying some stupid things, could be whatever. Okay? So there is no guarantees. There are only probabilities. So this is the bull flag that we are riding on right now. Under normal circumstances, if the market is ever normal, and never use the word safe. There's nothing called safe. You want safe, just never trade and put your money under the pillow, and that's it. All right? It should break out. And breakout means that we're going to go to with that round figure of 18,000 psychologically speaking. So that's an easy mark that you can put out there. All right? Okay. Now, let's take a quick look at the S&P. We're going to go over a few charts. I'll take a few questions, and then we'll wrap up. So here we have the S&P 500. I know my Algo HFT charts, which are on my other CPU, and I can show it to you right now, but it's all there for people to see, are very precise, very accurate. Those things are like serious. They're basically a couple of notches better than the Thinkorswim charts. They really show you the I don't know. It's fantastic. So if anyone's interested in them, and I know some of you are using them, they're absolutely phenomenal. Okay, they're run by a company called Quodd, QUODD, and everyone that I've referred them, they give them a pretty heavy discount on their stuff. It runs about $100 a month or so, but it's not just a charting platform. It is basically a whole platform, not for putting in trades, but for quotes and all kinds of information, whatever. Who is C who just walked in? Excuse me. C, can you identify yourself, please? C, please identify yourself, or I'm just going to boot you from the room. Okay. Let me just send him a chat message. Are you somebody from StockTwits? Okay, great. That's fantastic. You missed a good portion of this webinar, so it's going to be on the Clueless 8. I'm putting it out there. Clueless 8 YouTube channel, so you feel free to just go in there and review it. And then sign up and join us. Okay, let's see here. Okay, great. Let me continue. So here's S&P 500. So people ask, oh, where's S&P going? All these, idiots on CNBC. By the way, those guys are seriously idiots. No offense, man. And some of them actually look like some too. But the bottom line is that you are driving within this channel, this wide one. Okay. So what you're basically doing is you're trading between 2000 or 1990 right here. Okay, 1990. To me, the rocket science to figure this out. And right here and up here. That's it. These are defined lines that I've drawn. This was the gap fill. We came and tested the gap fill. Can't be any perfect than that. That's what we did today. And then we had that big fat reversal candle. Now, what does this reversal candle say? It either goes here, which is around 2090, okay, or it does does another massive bearish reversal, i.e. a red candle, okay, similar to this, and breaks down towards 2020. 2020 is a line in the sand because all the so-called gurus out there have said 2020 is the line in the sand, but it also makes some technical sense because this was the hollow candle reversal, which I had posted, and I had written hollow candle. Look at my previous chart. People want to look at my charts. Scroll down the Twitter feed. One thing I am missing, and I do apologize for that, because we are in the second stage of the web development, that we haven't had a chance to populate the website with all the charts that I post out there. So I'll be doing that shortly. All right. In the meantime, scroll down or ask me for it, and I'll basically repost it on your thing. So anyway, so if we break this, then this hollow candle reversal, which I call, that's where the green arrow came in, will go there. If we break this, we're going to retest the 34-day moving average. That's around 2000 to 2010. We break that. We're going to test the 50-day moving average around 1970. And we break that, then the lines are going to start to turn. The lines start to turn. We get really bearish, not just tactical bearish. We get swing bearish. How about that? Okay. Because at that point, the trend change happens. Right now, the trend is up. So just remember that. Now, at this point, this would be the standard move, which is up towards the upper end of the channel. No magic here. You could get zigzags. You could get a 50% retracement of this move down. So you could give back about 100 points and still be within the range. And that's pretty much what is going on here. This is the line in this is the first level that we shouldn't breach, which is 2040. And my tactical algo HFT charts, which I posted numerous times on the Twitter feed, clearly show that. Also on the video cast. So that's it. And then we move. If we break this, I think there's going to be massive resistance here. However, if there's something weird going on out there and the market really wants to go, and that $1 trillion, remind you all, this $1 trillion short interest, $1 trillion short interest, I mean, great. How many zeros in a trillion? Anyone know? Can somebody tell me how many zeros in a trillion? Quick, without Googling
12.
it. What was that?
12. 12 zeros in a trillion.
Okay. And who, by the way, which Chris is this? Ah, 12. Okay. Was that Red Gem?
Yes.
Oh, okay. Okay. Sorry. So 12. So you got 12, right? So let's say 3 of those zeros need to be demolished, then we need to be up here. Okay? If that's going to be the case. So that's a lot of money on a short interest side. Highest short interest in 8 years. I mean, it's not a joke. So anyway, so like they say, you know, pain before pleasure, right? So there you go. So if that's the case, you know, write the pain trade, which is for shorts higher. So if we do break out, then we're looking at that the previous highs at that 2130 level. I don't want to go that far. I'm going to play tactical, and I'm going to use this 2090 level as a major resistance. If it happens, it could, over a period of weeks or maybe a month, even come down, lose 100 points. 100 S&P points is roughly about 600 to 700 Dow points. What's the big deal? It's a big deal if you constantly stay long when you're looking at the technicals, but otherwise it's really not a big deal. Now, if we break that, that's a different story, but we could bounce off like we did several times here. We could bounce here and then retest again the 2080, 2090, and keep on doing this for the next couple of months till we either break up or break down. In the meantime, retail traders are just going to go nuts unless they study and they follow what I'm saying and use their own mind. So that's what's going to happen. We are back in this channel. So we're back in this channel. All right. No magic. We're back in this channel. It's a wide channel. It's a 700-point channel. But we're not in the upper end of the channel yet. And my guess is we probably, given all the different factors in play, probably get there. All right. So that's it. Now, let's take a quick questions because I want to wrap this up by 10. So what do we got? Another 12 minutes? Yeah, all right. Let's take a quick look before I take any questions on what's happening with our good old VIX and the UVXY. Let's take a look at the VIX. Looks disgusting. If I show you a chart like this and say, yeah, really buy that stock, everything is negative, you'd be like, yeah, right, I'm really going to buy that stock. You can't buy this stock. The VIX is nothing but a stock, right? So look what it's telling you. It's telling you it's just bad. It's disgusting. I sound like Trump here. All right. Bottom line is, this is an hourly. We're getting oversold. We're not there yet. The VIX could very well get towards 1350 and towards the lower Bollinger, which is around 1325. VIX gets towards 13, short the market, buy the crap out of it. Okay? But nowadays, you just don't know. But we have to see these signals get deep oversold. Let's take a look on the VIX on the daily. Another horrible chart. I mean, seriously, think about this. Do you really want to buy? If I showed you a stock like this and said, oh, really buy this stock, like look at those candles and the tails on every single time it wants to move up. I'm not buying this. Exactly. Just go with the common sense. So looking at this thing here, the ultimate, but then at the same time, you're starting to see a positive divergence here on the internals. So that means there is buyers or so-called smart money buying the VIX right off this. Whichever the case, the VIX at the lower end of the Bollinger, which would be 12, which would be fantastic. I would love to buy the crap out of the UVXY, buy calls, SPX puts, the whole works. Calls on the UVXY and stuff like that. But right now, it looks like there's a little bit more downside left. You can clearly see that yourselves. I don't even have to explain it. Let's take a look at the UVXY. Yuck. I mean, they're really doing a demolition derby on this stuff, okay? I need to tell you that. So bottom line is, this is the hourly, forget that. Let's take a look at the daily. This was from a way back, the volatility cluster. Okay, so at this point, the UVXY, I'm trying to find some basis for what it can go to. 1 second. And believe me, just the way oversold can remain oversold, overbought can remain overbought. I mean, I'm sorry, overbought can remain overbought. It's just the way it is. So looking at this here, and if I use the Bollingers as a reference point, because I can't find any other reference point, it's 14, okay? 14 on the UVXY. However, on the weekly, you're starting to see that little turn. That means a nice slap down's coming. And you know when it's coming. I've explained that on my video cast. Can somebody tell me what it, rough approximate date that a big slap down's coming, which I've explained quite a few times on my video cast?
15th.
Well, not the exact date. It's before that. Yeah, it's before that. Because when you got to sell some nice hot stocks to pay that Uncle Sam the taxes, the tax man cometh, you're going to do it somewhere between the 12th and the 13th. So I would say by the time this week ends, don't go too hog wild with stuff. But here is the difference. The 15th also happens to fall on options, monthly options expiration, which generally what we have found over the years is a bullish event. So I would say the real slap down from a date standpoint comes somewhere between the 11th and the 13th, like a real slap down. And then you got to buy that, tactical buys obviously, and then sell as we get into options expiration, monthly options expiration around the on the 15th. I've said it before, and I've been right 90% of the time. And people who have been with me know that very well. That's day counts. Now, how and why that's going to happen, that's another day story. All right? So that's that. So basically, the next 5 days, don't do anything really crazy. Start trimming your profits, all that stuff. And as we get into next Monday, don't tempt the market. Now, in the meantime, the April 3s will work if you know how to cost average down a little bit, or you get out and then you say, okay, I'll buy after the slap down. But there are enough charts out there which are showing breakouts to say that it, that the sell-off can be contained. That's it. Now, let's take a look at this, which I've talked about many, many times and no one really talks about, which is a 10-year government bond. Remember, very simple things, which some of you might know, some of you might not. This is risk off and risk on, right? So when the yields go higher, this is not the price of the bond. This is the yield. You move the decimal point 1.2 is the left, so it's 1.755. The 10-year bond today closed at, looking at the screen, 1.755. Now, when the 10-year bond, which looks like it's bottoming, starts to rise, and this is what you call a market structure low bullish formation. Tom, you remember that from our previous lessons and everything, right?
Absolutely.
Absolutely. This is exactly what's playing out. The bond is going to rise to its 2%. That means money is going to flow out of the government fixed income market, which is risk on. That's what's called risk on. Risk on means that money is flowing into stocks or equities. And risk off is when money flows back into bonds. So bottom line is, if we does this dragon, market structure low, dragon bullish formation, whatever, you are going to see money flow out of the government bond market. That means yields are going to rise, inverse correlation, into stocks. And that type of rotation, when it happens, do not be short. And my opinion is that I think the government bond, the 10-year government bond goes from 1.76% towards 1.9% before it hits 1.65%. And if it hits 1.65%, let me tell you what happened every single time. Every single time the markets hit this absolute extreme level, okay, of around 1.65% on the government bond, you buy stocks hands down. I mean hands down, okay? Because at that point, the yield on the S&P 500 is more than 2.3, 2.4% versus, it's a little economics here for people who are, who don't quite get it, versus 1.65%. Is everyone getting this? So if you were,
Yes.
if you were the big global money, which flows in and out every evening, every night, every day, okay, would you invest in a safe, in something that pays you 1.65% overall, given circumstances are like okay, and the world is not falling apart? Or would you invest in something which is significantly higher at 2.4%? Obviously going to go up here. And the difference between these two numbers are, it's 0.8 divided by 1.65. It is 48% higher. Okay, this is 48% higher return you're going to get versus putting and sitting in dead money at 1.65%. Obviously going to head towards that. That's one of the main primary factors why money is moving into the stock market. Now, when this yield, the S&P yield, drops below 2%, okay, as the market climbs higher, remember, prices are inversely correlated with yields. Once the S&P yield falls below 2%, then bonds get attractive again. Because at that point, bonds are going to be yielding, let's say 2.1%. So you say, hey, I can be in a very safe asset at 2.1%. Why the heck should I put money in a volatile market that I can lose my principal, a chunk of my principal at 2%? I'll put money in there and lock in at 2.1%. Does everyone get that concept?
Yes.
Yes.
So when bond yields go up to here, which it will, 2.5%, and S&P yields fall below 2%, I can rest assured that's a significant market top. You want to know what a significant market top is? You look at the credit markets. So there you go. All right. So when the credit markets give you 2.5% or 3% on your money, The S&P 500 will be like rah, 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 all the way up there. You want to be a seller and a shorter of the equity markets. Fair enough? So that's,
Absolutely.
yeah. And this is the stuff that Goldman Sachs teaches all its big shot guys, in their initial years, and you're getting it for free here, all right? And I mean that. That's what credit analysis is all about, the basic version. So that's it. Any quick stock that I can look at? Show you Regeneron. Want to know momentum? This is momentum. Right now, this stock is heading for another $6 and possibly break out over the downtrend line. If it does that 452, then you're looking at 470, 485. And it doesn't even come close to what the stock used to trade at, which was $608. Respect momentum. If you don't respect momentum, you're gonna die in this market. Okay? Because momentum is animal spirits. Nobody really has it anymore. But when it comes back a little bit, this is what happens. All right? So, and what's the other one?
How about IBB?
Yes, of course. I showed that last week. I said it was going to break out, and my chart is dead right. This chart was drawn 2 weeks ago. Who asked that question? Can I ask who asked that question?
It was Corey.
Hey, Corey. So if you remember, I showed the IBB chart, and look at this breakout. Look at this breakout. IBB first stop is 297. This is big. This is huge. I called and I told people to buy the calls, if you remember. Okay. And here's what else is going on, Corey. See this lovely little crossover about to happen of the 34 and the 50? And if these lines cross over, good luck shorting the IBB or any stock on that side. Well, depending on the ones you're looking at. Once you see the crossover on the daily, which hasn't happened yet, about to happen. Remember, the mark of a great trader is one who spots trends slightly or maybe much earlier than before it happens. Because after it happens, everyone's a friggin' genius, right? So, but before it happens, causes pain sometimes because it doesn't do much. But this pattern is very defined. This is basically the birdie Allergan gave the government for stopping the Pfizer merger. Do you understand the thinking behind it? Forget the fundamental breakup value and all that garbage, okay? It's because all of a sudden Allergan and many other companies are free to be bought by large U.S. corporations who don't have to worry about foreign UK and Irish-based competitors trying to gobble up U.S. companies. Do you guys all get that? Do you all get that?
Yes, sir.
There you go. So you have to think outside the box for a minute why this happened. It basically opens up the field for the businesses to stay within the USA. So M&A activity will pick up. Companies like Blue, all these companies are very much on the short list of buyouts. And it's going to happen. No question about it, because we don't have to worry now because the government stepped in its own weird way, has excited the animal spirits of U.S. companies to buy their smaller competitors and their more specialized niche players, okay? So it's made in USA, baby. It's Blue, it's Juno, it's Kite, all those companies are in play. Sarepta, they're in play. So right there, I mean, I don't know how anyone can deny this move. Now, once it gets here, it's going to, let's see what happens. Maybe it does this pattern symmetry. Does this. I'm just basically matching this area, okay? And then see you later up here where there's a big fat gap to fill. That's your answer. Next one. Rare. Rare is on fire, man. Okay. So I don't have Rare on my screen here. It's on my other screen, but
Frank, sir, thank you so much for the psychological lesson. I need to leave. I appreciate your time much.
no problem. I want to go over some very important features for a lot of new members. Some new members who are here. There's a new member here, Roland, who we welcome, Corey's friend. Corey, could you guide Roland into what needs to be done here? Because for some reason he's Roland. Can you hear me? You're saying 1 second.
Yeah, I can hear you.
Okay, who's this? Roland?
That's rolling.
Okay, so I saw your message. I'm trying to scroll down to see this. It's very simple. You have to have a Twitter account. All my content is delivered over Twitter. You can put your cell number on this under settings on your Twitter account. You get automatic text alerts immediately I post anything. And you need to go through my Twitter account, and you need to send me a follow request from your Twitter account so I can accept you, and that's how it works. And all those instructions, just so you know, are on the website when you sign in.
Yeah, I got it. I have to wait for my activation to get reactivated. It's been 2 years since I used it.
Well, why does it? Well, you can activate it right away?
For some reason, they say I'm suspended.
Because you were a bad boy. So
No, I never used the damn thing.
okay, so in that case, create another one. Because
Yeah, that's probably what I'll do. It'd be easier.
let me just tell you one thing. If you don't get my trade alerts, don't waste your time here. Okay? Because
Yeah, that's
if
fine.
you,
I'm not going to open up new with my other email account.
you know, just open up with another email account. Exactly. Because when people come in and they're like sign on, and I actually spend the time to reach out to them. I don't even have the back office reach out to them because I feel like I should reach out to them. And then they're like, oh, I didn't say the following because then what the heck are you doing here? Because the meat of what we're trying to do here, the content is delivered over that. Yes, the video casts are there and all that stuff is there. But the content on a real-time basis is what makes you the money. So, you know, so definitely do that. Any other new people who are listening, feel free to come in, do the free trial, sign up, because the bottom line is that the type of accuracy and precision that's delivered and how you you know, work with it, you're not going to get anywhere. And I'm not some bullshitter, scamster, like a lot of people who are out there. I'll be honest with you, you know, put in $1,000 and the next day you're going to get 20,000 back type of garbage. The reality is it's your hard work and my precision stuff that I put out there has a lot of money to be made. And yes, you'll have losses. Yes, you'll make them back up. And there's a lot of support here, great people who are serious about what they're doing and not some bunch of kids who, you know, like, what was it? The BTFMD, you know, buy the whatever dip, you know, type of people who are engaged in our thing. We don't talk about how much money we make. We don't go around boasting around to people. That's for kids, that's for amateurs, and that's for idiots, in my opinion, okay? Everyone has their own money that they're working with. Everyone's got one goal, to get bigger, and that's what it's all about. So please, feel free to join Clueless 8 Trading. Go out and tell your friends. This videocast webinar is going to be published on, it's uploaded on the YouTube channel under Clueless 8, and I welcome everyone to join us. That's it for now.
Hey, Clue. Let me give you one shout out to everyone out there. I've been with this man for 6 months. This guy is a real deal. If the people have not joined, I recommend you. You will not find anyone out on StockTwist that's better than this man.
And let me just add by saying thank you and saying that when Corey first came in, I yelled at him on the phone, okay? And Corey still remembers that because he was having trouble signing. I'm like, what the heck are you doing, bothering me in the middle of my busy trading day? And that's what Corey said and how he reacts and everything. I think he's gotten to know me as a person because I used to give him a real hard time because, you know, people were slow to catch on and this and that, and then he got it. So I appreciate, Corey, you saying that, and I just want to put that in. And thank you. All right?
Thank you. I second that opinion. I've been with Frank from the beginning.
That's true. He has, and he's actually Yeah, he's actually seen my face, and he knows how good looking I am. But just kidding. Tom's a great guy. Yeah, but you know, but
Hey, Clue, one last question. On the tax thing that's going to take place, are they going to sell the best stocks during the tax week or usually the junk stocks?
good question, actually. I think they're going to sell the stocks that move the most. Now, keep in mind that a lot of people are not truly like really involved in individual stocks that much. Oh, by the way, that's Intercept, right? So tomorrow is, we're hero or zero. I have a moderate position, didn't go that hard. I took a bunch of profit and then rolled out to more cheaper ones, both common and options. So this is Intercept. So either we're going to, we might do a pullback and then a move, but this is certainly constructive. That's a good question. I would say that the commonly held ones are the ones that are going to be sold. But in general, I think it's going to be like, it's like this. You call up your mutual fund guy and you say, you know what, let's say Fidelity, and you say, listen, I'm in that aggressive growth fund. Can you sell like 2,000 shares, of that thing? So they'll sell the whole basket. So that's going to push down the whole sector. That's the way I think it's going to go. Biotechs, I don't think are really heavily owned by retail, to be honest with you, other than traders and stuff. So I think they're not going to be the ones on the side. What is it? What am I looking at? Under the microscope. I think it's going to be mostly the techs, the Apples, and that type of stuff. That's my opinion.
Thank you, sir.
No problem, Corey. Okay, so let me run. And listen, it was great having this whole crowd. And I wish everyone well. We'll connect tomorrow. And like I said, sign up for these coaching sessions. We do it on, I'm open to doing it on Saturday mornings. I do it on Sunday evenings because they're more relevant to what, when the futures start trading at 6 p.m. We know a little bit of idea what's going on. A lot of news comes out during that time. So it's more relevant, but I'm open to doing it on Saturday mornings like I used to do it early. But everyone sign up, and it's fantastic because it's going to help you do your stuff better. It's going to make my life a little bit easier, and I think it's a win-win situation for everyone. Fair enough? So that's it. Thank you for listening.
Thank you.
Thank you.
Thank you for listening.
Thank you.
Bye-bye.
Thank you, Frank.
Good night.